right, turning back to the major indexes, joining me now is Michelle Schneider, partner and director of trading research and education for MarketGauge.com. Michelle, it's great to see you. Happy New Year. And what should investors make of this market?
Well, Happy New Year, and great to see you too, Kristin. Well, I think as I listened to you at the top of the show, you asked three questions. Was that it? Is volatility going to increase? Or do we have more positive things to look forward to? And those are the three questions. So what's so interesting to me, though, is that we may not get the answer to that question as quickly as people would like, because from both a fundamental basis and from a technical basis, we really basically just hit some major resistance. And so people have been talking about the bullish charts, but they're looking at daily charts. If you look at a weekly chart or you look at a monthly chart, we've really hit a top of a range and we haven't cleared December highs. From a fundamental standpoint, with the Fed coming up, jobs numbers, and a lot of uncertainty in terms of the economic statistics, including inflation globally, people don't know if we've also hit a resistance in terms of the good news.
Yeah, I think that is a really good way to put it there, Michelle. Of course, we've got a lot of news that we'll be digesting this week as well, from a Fed meeting to earnings. Let's start with earnings first. What is the expectation from these big technology companies that do drive these major indexes?
Well, I think we've seen so far in terms of the earnings reports, which have been certainly lighter than they've been in the past, that it's going to be the forward guidance that's probably going to be the most influential. Tesla's a perfect example. Even though their earnings were better than expected, the initial result was sort of negative for the stock until Elon came on and talked about how roseate everything was going to be in the future. Then the stock rallied. And with Intel, it was kind of just the opposite. So I'm going to be looking very carefully at what they say going forward. But even no matter what they say, I think we really have to keep an eye on what happens here with the interest rates. Mm-hmm. And even though people think inflation's over, I don't think so. What happens with that going forward?
So, yeah, I'm glad that you mentioned inflation, because obviously we see some signs that inflation is cooling, and these car cut prices lower on some of these major car companies certainly is an example of that. But Michelle, the Fed meeting on Wednesday, and so what's your expectation as to how much the central bank will raise rates by and how the market is prepared to handle that?
Well, it seems like 100% consensus that they'll go up a quarter. It's, again, going to be what Powell says after. And I think the market's gotten a little confused about the idea of a pause versus an actual reversal or a pivot. And I don't see the Fed saying anything about a pivot. They could say that they may want to see some more digestion, but they've been very clear about the labor market. So, what's so insidious to me, Kristin, is not necessarily all the focus on the Fed. Today alone, we had rising inflation, and over the last several days, Japan, Italy, Spain, Australia. And so it's the food prices that are really starting to be somewhat troublesome when it comes to the areas. And then you wonder, when does that trickle to the U.S.? And regardless of what the Fed does, with all their best intentions to try to keep inflation under control, car prices may go down, but people are still going to pay much higher at the grocery stores.
Yeah, and I think some of the data, obviously, Michelle, that we're seeing with banks taking on extra reserves is in preparation of that as well. I do want to ask you top sectors that you're watching where you think there might be some opportunity in this market, and if you are recommending that people buy.
Well, we have our clients pretty heavily into some of the metals, in particular the miners and silver. We are also in gold, because we do believe that there will be a point where, again, despite good intentions of the government, of central banks, and with all the geopolitical situations going around, we may see another spike in inflation and the metals will do well. But we're also looking at some defense stocks, some biotechnology stocks. We've also been into Boeing and General Electric, things that have more industrial usages. But we're really not branching out that much. We have a little exposure in semiconductors, but we definitely want to see what happens over the next week or so with earnings and also with the Fed before we say, it's okay to go back to chip stocks.
All right, we'll learn a lot this week, that's for sure. What it means for our investments as well. Michelle Schneider, partner and director of trading research and education from MarketGauge.com. Michelle, thank you.